Hi students, welcome to Sunil's tutorial. I'm Sunil Nirwani and today we'll be doing this chapter called as contract costing. We're doing sum number 10 in the books of Rajendra Constructions. We're doing illustration 10 in the books of Rajendra Constructions. Right? Now let's see what have they given you. They said that Messrs. Rajendra Constructions obtained a contract to build a flyover with a contract price of 150 lakhs. The contractor agrees to pay 90% of the value of the work done as certified by the architect immediately on receipt of the certificate and pay the balance on completion of the contract. The contractor commenced work on 1st May and it is estimated that the work will be completed on 31st December. The actual expenditure and the subsequent estimated expenditure is given to you. Okay, let's start. Now, since estimated expenditure is given to you, you will have to make a contract account and a total contract account. Whenever estimated expenditure is given to you, you have to make both the accounts. Total contract account. So these are the two accounts that you are going to make, right? Now let's start. Direct material, debit, expenses and losses. These are all expenses. So they will be on the debit side to direct material. Debit, expenses and losses. Direct material in the contract is 33,50,000. Right? In the total contract, you have to add the actual expenditure and the estimated expenditure. You have to add the actual expenditure and the estimated expenditure. So, to direct material
is 3 crores 15 lakhs.
3 crores
15 lakhs.
15 lakhs.
33 lakhs and 28 lakhs. It comes to 61 lakh 50,000.
61 lakh 50,000. Fine. Next, to indirect material. Debit, expenses and losses. Direct material. Indirect material is given to you as 5,60,000, right? To indirect material. 12,60,000. How did he get that? He added the actual expenditure and the estimated expenditure. That's how he got it. To direct wages. Direct wages is given to you as 8,42,000 to direct wages. Now, direct wages is 8,42,000 plus 7,95,000. Someone tell me?
16 lakh 37,000.
16,27,000. 37,000. 16,37,000. Next, two subcontract charges. Two subcontract, all expenses on the debit side, guys. Two subcontract charges. Subcontract charges are given to you as 98,000. Two subcontract charges.
1 lakh 50,000.
Charges is 1 lakh
50,000.
1 lakh 50,000. Right? Next, two architects' fees. $1,84,000. Debit expenses. I'm writing all your expenses on the debit side. To architects' fees. 4 lakh 68,000. Next,
Special equipment charge.
to special equipment charges. To special equipment.
Administrative overheads.
I missed. Okay, we'll just come back to it. To special equipment charges.
486.
4,86,000. Someone just cross check that. 4,86,000 to special equipment charges. How much is it?
7 lakh 40,000.
7,40,000. Now let's get to the entry that you had missed. Administrative overheads. To administrative overheads. Administrative overheads. How much is administrative overheads?
6 lakh 50,000.
6,50,000 and in total contract to admin overheads 11 lakhs. Right? Next. Special equipment we already done. To supervision charges. Supervision charges.
10,000 per month.
Now let's see this. Let's see working out one, guys. Contract begins. Year ends. Contract ends. Right? Now they've given you that contract begins on
First
the
May.
work commenced from 1st May 2007. 1st May 2007. They're saying that the contract began and the contract was completed on 31st December 2008.
So that is year end.
They've given you that and is estimated to be completed by 31st December 2008. 08. Year ends on 31st March 08. Okay. Year ends on, we begin the contract on 1st May. The year ends on 31st March 08 and the contract ends on 31st December 08. So will please count how many months from here? May, June, July, August, September, October, November, December, Jan, Feb, March. Right? So you will have 11 months here. Right? And from April to December, someone please count
9 months.
9 months. Right? So this is going to be 9 months. So this is going to work out to 20 months. Now let's see this. They are saying that supervision charges is 10,000 rupees a month. Now your contract was for 11 months. So 10,000 rupees a month for 11 months will give you 1,10,000. Similarly to supervision charges. Now here in total contract you will consider the total time, that is 20 months. 11 months plus 9 months, 20 months. 20 months into 10,000, that will come to 2 lakhs.
12,000.
Acha, okay. So that means in the contract account it was 1,10,000 for the first 11 months, plus for the last 9 months it was paid at the rate of 12,000 rupees per month. Someone please do 12,000 into 9. 108. So this will be 2,18,000.
Yeah.
This is 2,18,000. Right? Next, establishment charges. To establishment charges. Establishment charges are 8,000 per month. So for 11 months it will be 88,000.
Yes, sir.
And to establishment charges 9,000 per month for 9 months. That's 81,000 plus 88,000. 169.
Yes, sir. 169.
Someone check.
81.
So 9 months, 8,000.
9 months is 9,000.
9 months.
Achha, 9,000.
Okay, so 81,000 there and 88,000 here. Right? 10 months 8,000. Right? Next. On the next other details they give you cash received. We never record cash received in contract account. Closing material at site. Debit. This is your closing balance, so this will come on the credit side. Debit your opening balances, credit your closing balances. Buy material at site.
4,10,000.
How much?
4,10,000.
4,10,000. Right? Next. Now, I had already explained this to you that the credit side entries don't get added and don't come into the total contract. It's only the debit side entries. Reason. Why is it that the credit side entries don't come on the credit side of total contract? Because whatever is on the credit side is the closing balance of first year will automatically become the opening balance of second year and will be used up, and that's the reason why we don't write it on the credit side in total contract account. Fine. Next, closing material at side, then buy
Work uncertified.
Uncertified.
uncertified work. 1,80,000. Right? Again, you don't bring it onto the credit side. Then by certified work.
75 lakhs.
Certified work is 75 lakhs. No, this is 7,50,000. I'm on 75 lakhs. Okay. And they've given you that this is 1 crore 50 lakhs. So this is by work certified. I'm not adding here, guys. Work certified is 1 crore 50 lakhs. Fine. So we've done these entries. Now let's see this. A special plant costing 13,40,000 was brought to the contract, and the estimated scrap value of the machinery at the end of the contract would be 1,40,000. Okay. Now let's see this machinery. Working note 2. How do you calculate depreciation? Depreciation is cost minus scrap upon estimated life. Right? Cost of the asset is, someone tell me how much is the cost of the asset? 13,40,000. 13,40,000
Less 1 lakh.
minus 1,40,000 divided by estimated life is 20 months. Guys, how did I get 20 months? 11 months of contract and 9 months of estimated contract. So this is 12 lakhs divided by 20. How much is that?
60,000.
60,000 rupees a month. Right? Now my contract is of 11 months. So my depreciation in contract will be to depreciation 11 months, 60,000 rupees per month is 6,60,000. Right? To depreciation is going to be 12 lakhs. Everyone's understood how he got 12 lakhs. What he did was 60,000 rupees per month into 20 months. Because in total contract you have to consider the total time period. Fine. Now, they have also told you that we finished that. It was decided that profit to be taken credit should be in proportion of the estimated net profit to be realized on completion of the contract, which the certified work as on 31st March bears to the total contract price. This we will do for tallying. That's your tallying formula. Maintain a provision of 2% on the total cost of the contract, excluding such provision for contingency. Someone please add all these expenses, guys. Someone please add all the total contract expenses. Someone please add all the total contract expenses.
Third,
13 lakh,
09.
no, 1 crore 30 lakh 92,000
Yes, sir.
to provision for contingency.
What is the meaning of contingency?
Contingency means an expense which may or may not occur. Right? Unforeseen expense is called as contingency expense. We don't know, some uneventuality may come, there may be an earthquake, there may be a flood, owing to which besides this I may have to spend an extra money to rebuild my contract. That's called as provision for
And
contingency.
sir, what
Spare
is
money.
fictitious assets?
Fictitious assets
Expenses on
which are written on the asset side of the balance sheet are called as fictitious assets. Contingency. Now, 1 crore 30 lakhs. How much did you all say? 1 crore
30 lakhs.
92,000.
They are saying that provision for contingency is to be maintained at 2% of the total contract expenses. These are my total contract expenses. They are saying that provision is supposed to be 2% of this.
2 lakhs.
2,61,840. So my provision for contingency is going to be 2,61,840. This is going to be only in my total contract account. You will not have this in the contract account. Fine, do we get this in here? I presume I've made all the entries. Let's start tallying, guys. Right? Let's tally this account first.
1 crore.
This is 1 crore 50 lakhs. This is 1 crore 50 lakhs. right? The difference is to be called as two estimated profit.
1646
16446
160.
160. 16,46,160, right? That's my estimated profit. Let's leave that there for the timing. Let's tally this.
80 lakh 90,000 credit side.
Credit side is 80 lakh 90,000. 80 lakh 90,000. This is going to be two notional profit, right? Someone please find out the notional profit.
Ten lakh 62,000.
10,62,000. Right? 10,62,000 is my notional profit. Fine, do we get this thing clear? Notional profit. Carry down. Bring it down 10,62,000. Right? Now, let's read that closing paragraph carefully. Working on 3. How do I get the profit? Profit is given to you in that closing paragraph. Let's read each word carefully there. They are saying that it was decided that the profit to be taken credit for, that means the profit should be equal to, to be taken credit for should be in proportion to the estimated profit, will be equal to estimated profit. It should be in proportion to the estimated profit to be realized on completion of the contract, which the certified work bears to the total contract price. Certified work certified bears to the total contract. Bears means divide. Okay. Now estimated profit is 16,46,160. Work certified in my contract account is 75 lakhs. Total contract price was 1 crore 50 lakhs. Divide first, otherwise your calculation will show an error. Divide first and then do the multiplication.
Eighty-two, 30, 80.
82, 30, 80. So that is 8,23,080. Right? Do we get this in here? So this is going to be my profit, 8,23,080. Carry this, 10,62,000. 10,62,000.
238
238,
920.
920. Sorry. Okay. This finishes the sum. We'll stop this here for the day. Thank you very much.